with most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone. I just want to share with you a report we have just put out. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to 2022wakeupcall.com. Again, that's 2022wakeupcall.com. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Joining me today is Mark Yaxley, Managing Director over at Strategic Wealth Preservation. They are a bullion dealer and a storage provider based in the Cayman Islands. Mark, always good to talk gold with you. Welcome back to the Danny Cambone Show here at Stansberry.
Well, thanks for having me back, Daniela.
Offline we were talking about gold and how it's really been doing its job, serving as a hedge against turmoil in the equity markets. Yet it still doesn't get a lot of love from Wall Street. So just for the folks at home, I thought it'd be a good way to start this interview with you, Mark, about comparing gold to the Nasdaq and S&P and other things. So you recently tweeted, gold isn't doing as bad as people think. As compared to during the last 6 months, Nasdaq, which is down 29%, S&P down 16%, the Dow 11%, Bitcoin down 47%, bonds 10%, gold really holding on here, right?
Exactly. And to your point, this is nothing new. Wall Street has not been a fan of gold for a long, long time. Gold is not part of the Wall Street playbook. So we shouldn't be surprised by that. And in fact, I would say that's probably a good thing, because if you look and see what's happening on Wall Street, as you just pointed out, we're probably happy that gold isn't part of that playbook. In fact, being out on its own and acting as a hedge, which is really what it is, it's a hedge against all of these other asset classes, is a good thing for investors right now. So I know gold and silver investors are a little bit restless. They expect returns to be higher under these market conditions. But as you pointed out, if you compare it to what else is going on, you're actually doing okay.
Exactly. And just as a side note, I know people will write in saying, oh, you and Mark talk gold all the time. And I just want to say, we talk gold because no one else is. Mainstream media does not cover gold. And I feel we'd be doing a disservice to the folks to not educate the folks out there about, gold as an investment, basically. So you say gold, talking about why gold is not, over $2,000 an ounce, you say gold does adjust to inflation over extended periods of time, but not always in the short term. How come, and why does it take a longer road here?
Yeah, that's something that people tend to forget, is gold is a slow moving animal. It is boring. It is predictable. And that's kind of the beauty of gold. It doesn't react as quickly as our Twitter accounts. It certainly doesn't react as quickly as the stock markets and cryptocurrency. And so people have to be patient with gold. If you look at gold over a long period of time, it adjusts very well to inflation. So if you held, for example, an ounce of gold in 1922, it would buy more or less the same basket of goods and services as you could buy with an ounce of gold in 2022. But in the shorter term, when we're talking 3-6 months, there is sometimes a lag for gold to catch up to inflation. And a perfect example, if you like history,
Yes.
is go back to the mid 1970s and the early 1980s. 1974 to 1978, inflation in the United States was averaging about 8%. So somewhere about where we are right now. Between 1974 and 1978, if you look at that period of time, gold had modest gains in that 4-year period from start to finish. But in the next 4 years, when inflation reached over 10% in the United States, gold exploded. It was up 285% between 78 and 1982. So there's a tendency for gold to lag behind and adjust over a longer period of time. So again, the message to gold and silver investors is be patient and let these metals do their job. They will come through in the end.
So why is silver, you mentioned silver, why is silver lagging behind gold?
That is a good question, one that many analysts are struggling with right now. But my theory is this: we are in the early stages of a very severe market correction, and I think anyone who wants to deny that at this point can just go back to the numbers that you alluded to, and just keep looking at the day-to-day stock market trades. And so, what happens with precious metals when there's a severe market correction is they tend to go down. We saw it in 2008. The first 5 weeks of that market correction, gold went down 17%. The first 2 weeks of the COVID market correction, gold went down 10%. We're seeing a similar reaction from gold and silver in this market correction. They are down recently, but that's only temporary. They tend to explode to the upside afterwards as that market correction continues on. So silver right now, what's happening is it's more volatile than gold. It will be down proportionally stronger than gold in a bad market, but it will also rally higher than gold proportionally in a good market. So I would expect for silver investors that their silver will be ticking up very strongly, but they have to be patient with that.
And I know you were just a speaker and a panelist at the Vancouver Resource Investment Conference, Mark. And what was the sentiment there? What were you hearing? I mean, this is a conference generally, focused on the precious metal space. I mean, were people optimistic?
The general theme, Daniela, was that people are pretty optimistic about the commodity space in general, the resource space. So not only gold and silver, but some of the rare metals, even some of the more common metals. A lot of potential for Canada and other countries that are strong in the mining space to step in where we're going to see some pretty severe disruptions out of the Ukraine, out of Russia, out of other countries that tend to export a lot of natural resources. There are going to be interruptions there. There already are interruptions due to the war. So a lot of potential for the Canadian market to step in. That's one of the themes that we saw and we talked about. And obviously the inflation question is on everybody's mind,
Sure.
and how is that going to continue to
Yeah.
impact the market?
Yeah, and on that point, just want to bring up, Bitcoin versus gold here because, a lot of folks were curious to see how both would perform during this inflationary time. I mean, do you think we can clearly make the thesis now that Bitcoin is still too young to combat inflation and gold's the winner here?
I think so. I mean, it's so young that it's hard to say what it is still. I think we're all still learning how Bitcoin reacts, but right now it looks like a tech stock more than a hedge against the
Yeah.
equities markets, that's for sure. I mean, it is the worst performing asset class, and Bitcoin is doing better than some of its colleagues out there. There are certain coins now and tokens that have lost 95, 99% of their value in the last 30 days.
Yeah.
So I don't know if Bitcoin has to reinvent itself. That's probably a strong word to use, but investors need to figure out how they can use Bitcoin effectively in their portfolio, not only to earn returns, which it obviously can in a good market, but how to position it in their portfolio in a bad market. Because if you've been holding Bitcoin over the last 6 months, it's really not doing you any favors at all.
Now, I mentioned you were at the VRIC, Vancouver Resource Conference. Obviously, a lot of gold miners there, and oftentimes when I have some experts on, they'll make they'll make the case that you're better off in gold miners to see that quick return that physical gold won't give you. So, what's your take on that, Mark? Like, do you believe in having a mix of both, and it depends what your goal is? What do you tell your clients?
Yeah, it's a great question, Danielle. It actually came up on the panel that we did at the Vancouver Resource Conference. And my answer to the question was, my portfolio has two segments. Segment number one, I'm trying to earn money. I'm trying to earn returns. So that's where I'm going to have my stocks and interest-bearing, dividend-bearing investments like junior miners, for example, or mining stocks in general. That segment of my portfolio is really designed to increase my wealth. I'm speculating. I'm trying to gain wealth. The other segment of my portfolio, which is heavy on physical precious metals and real estate, for example, would be I'm trying to protect my wealth. This is wealth preservation, wealth insurance. It's money that I already have and that I want to hold over the long run. I just don't want to hold it in cash necessarily, so I'm going to invest it in hard assets. So if you look at it that way, you can kind of structure your portfolio in two different ways where you have income earning and income protecting assets.
Mark, if you don't mind, I actually tweeted out that you'd be coming on the show, and I got some questions. I think we'll have time for a few here. So Bitcoin Bear Club wants to know, Mark, which is better for gains right now, gold or silver? What do I do?
I've always said, Daniela, I think you should own both. It's kind of silly to try to pick one or the other, this kind of black and white situation. You should own both because you're in a more diversified position when you do. But I think where we are in the market today, silver has been really underperforming. It's been a disappointing performance for silver, lately. And I'm not a big silver bug either. I tend to invest more in gold. I tend to point our clients towards gold in general. But right now, where silver is, and I think there is going to be, some pretty significant upside for the precious metals, that's when silver does really well.
Yep.
So if we see this market correction continue in the equities market, silver should be popping, whether it be 30 days or 6 months. I can't tell you that, but it should go at some point.
Okay, another question for you, and I know we did a segment on this before. Everyone should check that one out. But Scott Kimler wants to know best advice for taking precious metals across the border. You're an expert on this, Mark.
Well, there's a few ways to do it. There's actually 4 ways you can get metal into another country, but I'm going to keep this simple for the sake of time. The best way to do it, if you want to move existing physical metals across the border, is contact a company that specializes in transportation, whether that be a company like ours or other players in the market. They will do all the export paperwork for you, all the importation paperwork, so exporting from the country where you're bringing it, importing to the country where you're going, and they'll also, most importantly, insure the goods for you. So I would say get professional help. Doing it yourself, unless you intend to hand carry it across the border yourself, can be daunting for some people.
Okay, I also had a few questions come in about this, about storage, which obviously is your expertise here at SWP, but why we should think about storage, outside of the country you live in. So let's say, outside of the US or outside of Canada.
Well, specifically Canada and the US, I think the biggest risk right now would be kind of the political risk, especially in Canada. I was very proud to say as a Canadian up until recently that we had never suffered from confiscation from our government. And that changed a few months ago with the Emergency Act that was enacted by the Trudeau government. So it is a reality. I'm not saying it's likely to occur. I'm not saying the Canadian government is going to be kicking down people's doors to take their gold and silver coins. But if you are concerned about that, or you hold a lot of precious metals in Canada or the US, your biggest concern right now is probably from a political government overreach standpoint.
Okay. So if say if the folks are like, but I want my gold and silver close to me, how do you, it's kind of like the first day of daycare when you have to separate from your toddler. How do you talk people through that it's okay, you don't necessarily have to have everything, so close by?
Right. So probably a little bit like a young mother and father, which I'm sure you can agree with, is you're going to want to go out and find the most professional outfit possible. Do your homework, find a reputable storage company that is designed to house your gold and silver, that offers you insurance, that offers you obviously security, that offers you liquidity if ever you want to sell. I guess that would be the equivalent of picking your kids back up later.
Yep.
But anyways, you want to do your homework and find a solution that is good for you, that makes you comfortable as an investor.
Yep.
And obviously, if it's within a half day's travel, all the better. You can get there quickly and go check the place out.
All right, especially if it's a beautiful place like Cayman Islands. And I always like to bring it up here because I think this is a common myth out there. People think, the gold and silver is insured if you have it in a bank. It's not, right, Mark?
Generally speaking, Daniela, if you read the safe deposit box contract that you'll sign with your bank, it is not insured. So if anything goes wrong at that bank, and the most common thing that we've seen over the years with banks is employee theft, or the box just being drilled out, the wrong box gets drilled and the stuff goes missing. The records aren't always as good as you'd expect them to be, and unfortunately the safe deposit box holder is not able to recoup their lost gold or silver. Yeah.
Oh, okay. Finally, Mark, I love asking you popular products that you're seeing now. How about platinum, palladium? Are folks asking for those these days, or is it really just gold?
They are. The problem with platinum and palladium right now, Danielle, is there's not a lot of it available on the market. The mints and refiners have been so busy over the last 2.5 years that what happens in a busy market is they focus their production on their most popular products. So that's going to be like the 1 ounce maples, the 100-ounce silver bars. They're really using all their machinery and all their resources to pump those popular selling products out. The secondary products like platinum and palladium, for example, those tend to get left to the wayside, or very small production runs are made. not enough to satisfy the market. So in most cases, unfortunately, when clients are calling us for those products right now, we're not even able to sell them to them.
All right. Mark Yaxley, before I let you go, final thoughts for the viewers watching. Obviously, some troublesome financial times that we're seeing in the markets right now. What are your words of advice?
My personal belief, Daniela, is the stock market correction is going to continue. It's going to be pretty severe. I don't think you're going to see small rebounds. Yes, you're going to see some better days than others, but the general trend is going to continue down. And second word of advice is be patient with gold and silver. Like I said, they tend to go down in a market like this initially and then rebound up. Hopefully we'll start seeing that soon.
Mark Yaxley from SWP, Strategic Wealth Preservation. Thank you so much for coming back on. We'll see you soon, Mark. Oh, you're a hockey fan. Who's going to take the cup this year?
Oh, that is the hardest question you've asked me. I think all I'm going to say is I think it's going to be an Eastern Conference team. The teams in Florida look really good. The Rangers are kind of a surprise.
Yeah.
We'll see, though. It's too early to tell. I couldn't tell you, to be honest.
Yeah, my husband's obviously very happy about the Rangers side of things. But anyhow, Mark Yaxley, thank you so much.
Thanks, Daniela. Great to see you again.
And thank you all for watching. We'll have much more for you coming your way on Stansberry Research. And don't forget to sign up at danielacambone.com so you can stay on top of all the latest interviews coming your way. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.